Gentlemen, please join us on the stage. I must inform you that we need to be done by 3 o'clock on the dot, preferably a minute before, in order to prepare for our showpiece interviews. So I may have to butt in at some point. Fantastic. So, ladies and gentlemen, please welcome our panel for financial inclusion this morning. We're still missing one member. Ali Sarfraz, are you in the room? He's not. I think we should start anyway, and hopefully he'll join us in a moment.
Ladies and gentlemen, good afternoon, assalamu alaikum. We have the unenviable task of being the last hurdle between you and the great Wasim Akram and Imran Khan that are to follow. So we'll try to make the best of the opportunity that we have. But I think the topic of this panel discussion, which is financial inclusion, is a very important subject, which is a lot of time is not fully understood. But it does impact the economic and financial destiny of this country and of the world overall. So what we will try to do is to break this down into very layman terms, so we won't have much of a technical discussion, and then hopefully we'll have time to take some questions also, because seemingly we are short of one panelist. So unless Ali shows up, we may have 5-10 minutes of time to potentially take some questions also. So I will start off by, first of all, introducing my esteemed panelists. I will start in the alphabetical order, and I'll start with Mr. Kasif Shahid. Kasif is the CEO and co-founder of Finja. And by the way, Finja stands for Financial Ninjas. Finja is Pakistani fintech startup with a mission to transform how people relate to money and make payments. Previously, Kasif founded Finsurgents, a financial services startup consultancy which specializes in retooling analog businesses into digital businesses. The firm has clients in Pakistan, UAE, and Africa. Kasif has also close to 20 years of multi-country experience in building, managing, and growing digital financial services products and businesses. He previously served as head of digital banking for MCB, one of the largest banks in Pakistan, and earlier on as head of marketing and digital channels for ABN AMRO Bank, Singapore. Before joining MCB, Kasif also worked at Standard Chartered Bank as head of digital banking. So we look forward to listening to Kasif's point of view on financial inclusion, and I think that you will be completely bowled over, using a cricket terminology just to set the tone, with the passion that Kasif brings to the table. I'm a big fan. I'd like to now introduce our second panelist, Victor Mallet. He is the Asia News editor for the Financial Times, based in Hong Kong. He is responsible for the FT News gathering operations across Asia Pacific region and for the presentation of Asia News in all global editions of the newspaper on ft.com. Prior to this role, he was the South Asia Bureau Chief based in New Delhi. He covered India's economy, politics, and foreign relations, as well as news in Pakistan and Afghanistan. He spent 4 years as Madrid Bureau Chief, and before that, he was the editor of the FT's Asia edition. He is also author of a book, The Trouble with Tigers, The Rise and Fall of Southeast Asia. He is also twice winner of SOPA, Society of Publishers in Asia Award for Opinion Writing. So, ladies and gentlemen, if I can ask you to please give us a round of applause for the esteemed panelists. And just in time, our third panelist has also joined us, Mr. Ali Sarfraz. Ali is the CEO of Karandas Pakistan, which is a non-profit company set up by DFID and Bill and Melinda Gates Foundation. He's leading the company in improving financial inclusion through SME financing, technology-enabled digital solutions, and disseminating policy research. His professional journey encompasses experience across private, public, and not-for-profit sectors. He was engaged in advising private sector firms while working in senior strategy and operational roles in Asia, Europe, and the US. He also developed new strategies in the wake of mobile number portability for a major mobile operator in Pakistan. While working in senior policy positions, he focused on building conducive business environments, developing skilled workforce, and adopting technology use for the government. So welcome, Ali.
Yeah, thank you very much. Pleasure to be here.
So, okay, I'm going to start off by just setting the stage a little bit in terms of the state of financial inclusion all over the world. So we have roughly 4.2 billion people today who are of working age in the world. Of these 4.2 billion people, over 2 billion people do not have access to even a simple bank account. Now, coincidentally, 500 million of these over 2 billion people live in right here in South Asia, between India, Pakistan, and Bangladesh. And then, interestingly, the poverty patterns and the financial exclusion patterns are very similar. So people who do not have a bank account and people who live on, let's say, a basic poverty benchmark on less than $2 a day, they are concentrating in sub-Saharan Africa and in South Asia. So there's a direct correlation between poverty and financial exclusion. So today, there are 1 in 10 people live on less than $2 a day, and 65% of them live in the sub-Saharan Africa and South Asia. So I'm going to start off by my first round of questions by asking my esteemed panelists about their thoughts on the various reasons leading to financial exclusion in the world today. So let's see. So we're going to start again in alphabetical order. So I'm going to start with you, Ali. If you can start off by just telling us a little bit about Karandas. What is Karandas's mission? And then what are some of the work that Karandas is undertaking in Pakistan?
Thank you very much. Well, Karandas, the word means entrepreneur. And the focus of Karandas is on financial inclusion. And we are trying to achieve it by increasing the access of financial services to the unbanked population using digital financial technologies. And on the other hand, we are also trying to increase the access of finance to small and medium businesses. These two can be distinct, but they are also working together. And the reason for selecting small, medium businesses is sheerly their contribution to the economy. And increasing the access of finance to access of financial services to unbanked population, that's critical in terms of their financial inclusion. And the point is having a transactional account which individuals can use for savings, for credit, and for other financial products. And it has a huge impact on not only their lives, on reducing poverty, but also on the economy as a whole. And this is the mission. We were established as a not-for-profit towards the end of 2014, have been in operations for roughly about 2.5 years. And I think you also asked about the major kind of interventions that we're doing. Yes. So very quickly on increasing the access of finance to SMEs, what we have done is we have invested in Pakistan Microfinance Investment Company, which is a wholesale microfinance platform. We have a roughly about 38% equity stake. Our other partners are Pakistan Poverty Alleviation Fund and the German Development Bank. And the purpose of this platform is to provide capital through capital and credit markets to microfinance banks and microfinance institutions. So it's fully capitalized this year, actually towards the end of the last week of last year, and it has started operating. Secondly, we have a growth capital where we take direct equity stakes in small growing businesses. We have closed our first deal. We have made an investment of 1.2 million pounds in a technology company, TechLogics. Then we work with partner financial institutions, banks and non-banks, to develop credit products, and we are in a risk participation framework with financial institutions and provide credit to small businesses. This part of the business is funded by DFID. The second part, which is funded by the Gates Foundation, we are focusing on developing a low-cost payment system, digitizing payments, whether it's P2G or G2P, and we have certain interventions in the pipeline. We are also supporting innovation. So last year we held a FinTech Disrupt in partnership with LUMS in Lahore, where some ideas were pitched, and we funded 3 entities, up to $100,000 each. We have given them the first tranche, and as they achieve their milestones. And finally, doing research work in order to support both sides of our business.
Very impressive line of work. So let me ask you, Ali, that you have broadly speaking, you have outlined 3 areas of intervention that Car-Andaz is working on. One is that you're making strategic equity investments into those kinds of institutions that can then develop the overall ecosystem. The second one is that you are helping digital finance, and the third one is helping SMEs. Right. So the canvas is so large. How did Car-Andaz get to select these 3 interventions, and why?
Right. So let me start with a bit of a background. Car-Andaz is actually a successor of the financial inclusion program, which was initially set up by DFID in partnership with the State Bank. And the idea was to have a platform, which is a development finance platform with a double bottom line. So although we are not for profit, but we look at financial returns as well as development returns when we are making our investments, at least on the DFID side. And while it was being set up, the Gates Foundation was looking to set up a digital financial services unit in Pakistan. And because of their international collaboration with DFID, they joined hands together and decided to use this platform. You're absolutely right that there are quite distinct businesses, digital financial services as opposed to, typical corporate investment and credit and growth capital investment kind of work. But what we are seeing is an increasing convergence coming together. For example, digital credit is now the next big thing. So you have both credit, which is our credit side, and then you also have, on the other hand, digital financial services. So they are coming together, and because although the businesses are distinct, but the focus is on financial inclusion, and you actually have to crack that nut by using various strategies. We are just using 2. There are others. Financial literacy and education is a very, very important component, although it's not one of the key things we are focusing on, and our partners, they are looking at it. But we are focusing on these 2 areas.
Thank you, Ali. We are very excited about the work that Car-Andaz is doing, and it has already made waves in a span of less than 2 years since it has started operations. So work very well done. I'll come back to you for some more questions.
Thank you.
But I'm going to move on to now Kasif. So Kasif, you have had a very interesting journey. You started your career, as I was reading your bio, from commercial banking, and then you were doing fairly well, and you were in Singapore, and then with ABN AMRO, and your career was on an upward trajectory, and then all of a sudden you've become a bit of a hippie, and you have left banking, and you're doing something completely different. So Can you tell us about your journey and what is it all about?
Yeah, thank you. You know, the industry is in trouble when any one of the three things are wrong with them. So the first one is that if their business model gets outdated. The second is if they're built on a grandfather-like old technology stack. And the third is that if their customers don't love them. And you know, what's wrong with banking is that all these three things are true. So, you know, customers don't love their banks anymore. Technology stacks are old, business case is outdated. And you know, when you spend 18 years in that industry and you're at the dock of the big ship, then you can see things coming that others can't. And I saw that. And the reason for that is, quite frankly, that all banks and all incumbents, which means all old world companies, are badly designed. They're badly designed because they believe in winning on their own. And a bad design is when you want to win on your own. Now, in the old world order, where resources were scarce, where everything happened in the physical world, where you had factories to run, then at that point, it was about having a bigger size of the pie, but it wasn't that much about growing the pie. In the new world order, there is no scarcity. It's all imagination, because we've arrived now in the business models that fully and completely live in the digital space. In the digital space, the only design that works is a design where everyone wins. And unfortunately, the incumbents and the banks don't have those designs, so they can't win. The organizations of the future have to be designed where everybody's winning. So the kind of work that I'm occupied with now, everyone wins. My merchants win, my customers win, my partner bank wins, my fintech wins, the regulator wins, the industry wins, Pakistan wins. We all win. You can't design things like these from incumbent players. That's why I'm out.
So this is very inspiring, Kasif, and these are great reasons, somewhat controversial, I believe. Hopefully there are no bankers in the room except for me, where you're saying that their customers don't love them anymore, and their business model is outdated, and their technology stack is old, but their profitability is unprecedented. I mean, it's still going up more than ever. So what is it that I'm not seeing that you're talking about?
Yeah. Look, I mean, we got to, you yourself stated that most of the world is unbanked, right? So the question is, why is it unbanked? And the answer is that the commercial banks in the emerging markets have failed the people. Why have the commercial banks in the last several hundred years have not managed to bank people in the emerging markets? And the answer is in the examination of the branch banking business model. So it's the branch banking business model which is failing the world. And what is the branch banking business model? It's the only model in the world where the branch manager, she is the one who's deciding whether she's going to bank a prospect or not. So when a prospect walks in, you judge them for their worth, how much money they have, and because your time is limited. The branch manager, her space is limited, her time is limited, and she can only deal with the most profitable. So this is the only industry in the world that's actually turning down customers based on their economic worth, because of which the large part of the world is unbanked. In the new world order, time and space is not relevant anymore, because people are going to consume you on their smartphone. That's how the business model is outdated. Because this business, what is a banking business model? That the customer has to have a lot of money and they should never come in and take that money out. That business model is obsolete. Now you want a customer, whether they have money or not doesn't matter. What matters is that how many times they're going, how much, at what level they're engaged with you, and at what level are they going to spread your services in their inner circle. It really doesn't matter how much money they have with you, as long as they're spreading you and as long as they're engaged with you. So here is the business model being outdated. So the next question is that what is wrong with microfinance banks? Because, you know, they've been around for 40 years and they've failed the world too. And the reason is that everything in the microfinance business today is analog. So we go out and we fill out forms, then we take these forms from one city to another, and then finally we open a relationship, then we hand out cash to our customers as a loan, and then we take cash back as a loan. All 3 points are analog. They're expensive and they are scale prohibitive. So when you open a relationship in the real world, it costs time and money. You give out people cash, it's expensive. You take cash back, it's expensive. That's why microfinance banks are lending to people at 40% interest rates, because their operational costs are in 30s. And therefore, there are only 200 million or so active microfinance customers in the world for 45 years. The telephone companies on the other side have, changed the behavior fully in a matter of 15, 20 years. So both microfinance banks and the commercial banks have largely failed the world.
Very interesting points, Kasif, that you have made. And one point in particular that resonated with me, that how the legacy banking model thinks that banking is not a right, it's a privilege. So it reminds me that when JP Morgan opened his first office on Wall Street in late 19th century, there was no sign outside of his office. And somebody asked him that, why don't you put a board or a nameplate on? And he said, those who need to do business with me know who we are and where we are. So that's essentially the root, the foundation of modern banking, which consider itself to be a privilege but not a right of an average human being.
Yes,
so
yes.
Thank you,
yes.
Kasif, for making that point. I'm going to move to Victor. Thank you for your patience. I know we've been talking amongst ourselves for now 15 minutes. So you have spent a considerable amount of time in this part of the world, in South Asia, and you have had an opportunity to examine the political economy of this part of the world. And then you have experienced or witnessed financial exclusion and its impact on this part of the world also. What do you think is the root cause in your observation for all of this?
Thanks very much. And first of all, I want to say I feel I've been bold, to use your earlier cricketing metaphors. I've been bold a bit of a googly because I'm not an expert on financial inclusion. So I very much defer to my Pakistani colleagues here who clearly have their hands on real, microfinance and technology businesses. So I'm very much more interested in hearing what they have to say than what I have to say. So I'm going to give you a generalist point of view. A quick word on the numbers. 500 million people who are financially excluded in South Asia. That sounds like a lot of people, but I think, as you said earlier, that's very much correlated with poverty and, in fact, with the numbers of people, the large population of South Asia. So I think actually, if you look at that numbers, that's a quarter of the unbanked people are unbanked in this part of the world, but then a quarter of the people in the world live in this part of the world. Right. So I think what you find if you look around the world is that South Asia may not have been doing incredibly well in financial inclusion, but it also hasn't been doing incredibly badly. So I don't think, there's anything to be ashamed of in that field. Now, our coverage at the Financial Times, we're probably a fairly typical in this regard. We've definitely changed the way we cover these kind of issues over the last 20 years or so. So we used to write a lot about micro-lending as a phenomenon, as a new phenomenon that happened. We wrote about it in Africa a lot, and in Bangladesh, of course, where Mohammed Yunus had his operations, for which I think he won the Nobel Prize. So this was a very interesting financial phenomenon. And that's why we wrote about it. But now I find that our coverage is very much directed more towards the technology end of the business of banking and the business of microlending and the business of getting to poorer people, getting them banks, and all, of course, now through the medium of the mobile phone, of the smartphone. So that's kind of where we're going, and I find that we write a lot less about microlending as a kind of operation, and maybe we should do more, but we're very much focusing on the tech. And I actually have a sort of couple of questions for you guys about that tech issue, which I'll maybe come to later. But one of them is, does it matter if people aren't educated when they're accessing these banking systems via their mobile phones? And maybe you can help us answer that later. But there's another issue, I think, of policy that is quite important. And I've got a cautionary tale to tell here about India, where obviously, you know, most people in South Asia live, a very large economy, and whether policies are actually always structured rightly and implemented rightly to allow people to carry on accessing credit and microcredit and so on. So the Modi government in India, in 2014, they launched a big drive to bank the unbanked, and it's been quite successful. And using, you know, Aadhaar, which is the unique ID that you have in India, which is biometric, and most Indians are now on that system, and it's made it much easier to combine the, you know, the ID, the bank, and the mobile phone together, so that people can get access to finance and so on. And there are very good reasons for this. They want to deliver subsidies without corruption, which means that subsidies will go directly into the bank account of the poor without having to go through a middleman who skims off money. It will mean that people don't have to expose themselves so much. If they have a bank account, they don't have to expose themselves so much to pyramid schemes, money lenders, and so on. And it is, you know, I think it's admirable, and it clearly makes sense as a way of fighting corruption, as a way of improving the subsidy system. It is not clear entirely how much these accounts are actually used by people except to receive those subsidies. And I think that's still very much in process, and we'll see whether they finally come to be used fully. But the policy issue and the way that governments and politicians can mess things up is very clearly demonstrated by a story that was in our paper or our website this morning, and that's coming out of India again, where the government of Uttar Pradesh, the new government of Uttar Pradesh, which is run by this guy Yogi Adityanath, as a kind of very populist measure, they basically cancelled you know, loans. They gave loan waivers or repayment waivers to something like more than 20 million small farmers in India. So $5.6 billion of loans to, you know, small loans to small farmers are essentially being written off. Well, the Central Bank of India is horrified by this, not just because of the immediate fiscal problems that will cause for the government of Uttar Pradesh and the central government of India, but because of the lessons that it gives you, which is that you never need in India, when you take a loan, you never need to pay it back, because some government will always come in and there'll be an election and they'll forgive your loans. And this is clearly incredibly bad news for commercial lending and micro-lending enterprises, including obviously the big banks, but also including small startups. So the central bank governor was, you know, he spoke about the dangers to the fiscus, but also the dangers of moral hazard. You know, what about the people who were repaying their loans and who wanted to carry on repaying their loans? They've been taught a lesson, which is that you should never pay back a loan from a government that is politically inclined to forgive that loan at some point in the future. So, you know, it's clearly a huge problem. So I'll probably leave it there, but just to say that, you know, there's often a policy issue around this. And I just have one question, apart from whether or not, you know, education is required for use of these banking systems that are very tech-driven nowadays. And the other one is security. How much of a risk or a problem is security? You know, how much in terms of verification and in terms of encryption, that kind of thing? Is that likely to be an issue? Because you could easily see a situation in which suddenly everybody would lose faith in the system if money was stolen or if somebody successfully had some kind of IT scam. So that's really a question rather than a statement. But
great.
Thanks.
Thank you, Victor. So Victor, you have raised two important questions that we will park them in the parking lot for now, and then I will ask Kasif later on to address those two issues. The number one is education of consumer, and the second one is security. And then in that context, you know, what I would really want to ask you, because I'm going to go to Ali next, when I come back, what I want you to gather your thoughts on is that really digital finance is a silver bullet that everyone is talking about to end financial inclusion from the world, and also to address these two issues, education and security. So, but Victor, also, you brought up a very interesting example of how a policy intervention by a political government can have very serious consequences for the overall financial sector and for viable financial ecosystem in a market. So Ali, what's your take on, what's Karandaz's take on the politically backed programs by the government in the financial services sector, where a lot of times subsidies are offered by the government, or free interest-free loans are offered, etc., which are essentially not really sustainable solutions once the subsidy is pulled out. How does Karandaz, or let's say DFID or Gates Foundation, view such interventions?
Well, thank you. First, I would like to address the question that was asked about ability of consumers who are not literate to use these financial systems, digital financial systems. The reason I've taken it first, because we have done some work on that. That's on the user interface and user experience. And that work was done from the perspective of a consumer who is illiterate, but financially literate. And having the right kind of wireframes. These are the designs on the smartphones and apps in which pictures and voices, they play a very, very important role. And we have done that work, and what we have done is, after doing that and developing those frames, we are now working with one of the mobile operators on developing their app. And they will launch, and then we'll see the results, to what extent that goes into and is able to penetrate. And on the security issue, I will refer to Kasif. Now, coming to your question about the sustainability of programs, what I can tell you is what we have done. So, for example, in microfinance, and one of the options for Karandaz was that we could have just launched a interest-free program, right, for the consumers, for microloans. Or rather, what we have done is developed a platform. And it is a for-profit platform. And that platform has to leverage both the capital and the credit markets. Now, we don't have, in this country, a very well-developed capital markets. I can't go and sell paper and raise funding and then, channelize it. However, at the same time, while we want to make sure that, we have a platform which is financially sustainable, does not depend or relies on any government subsidies, is driven by the market demand. At the same time, we want to make sure, that the benefits are passed on to the end consumer. So, for example, let me quote you an example. Kasif mentioned, that the effective annual interest rates charged by microfinance, they are north of 35%, right? Now, the policy rate has really come down. KIBOR has come down substantially. However, you don't see those benefits being passed on, right? And I think that's where some intervention by the platform, the wholesale platform, is required. So while we don't subscribe to programs which rely on subsidy and they become unsustainable over time, what we do believe is that, between financial returns and between development returns, there is a fine balance that has to be maintained. It's a constant struggle. And we constantly struggle with it ourselves, when we make an investment. To what extent, it's driven by financial returns, and to what extent it's driven by development returns. There's a whole a spectrum developed in terms of the impact investing, right? So our view is clear that programs should be sustainable, not reliant on subsidies, and driven by the market forces and the market needs, and having the right business models.
Great. So, ladies and gentlemen, we have endorsement for sustainable financial solutions from Karandaz, Pakistan. So,
yep. Okay, that's good. Excellent summary. I couldn't have summarized it better.
So I'm going to move to Kasif now with that question that we had parked away. So yeah. I think since Karandaz, which I've failed to mention, has actually sponsored a great study on human-centered design that he mentioned, which was very useful. We even used it at Finca as well. So I think that's partially addressed, that how the uneducated or not formally educated people can use a smartphone-based financial solution. I'd like you to talk about briefly on the security aspect of it. And then the other question that I had was that, do we finally have a solution to financial exclusion in the form of digital finance?
Okay. Yeah. Okay. So, the first thing we need to realize is that landlines and bank accounts in the emerging markets were privileges. But mobile phones and mobile wallets are now everyone's birthright. So that's how the world is moved. Landlines and bank accounts lied in the real physical world. They needed analog infrastructure. The business models that were driving them and the cost implications were very different. That's why Pakistan was like the 127th country in terms of number of landlines. We had 3 million landlines in the year 2000, only 3 million. Now, from 2000 to 2010, we moved to 100 million feature phones. We become the 6th largest country with phones. Similarly, bank accounts are rooted in the branch banking model, but mobile wallets are not. So in the new world order, everybody has a birthright to have a mobile phone as long as they have a digitized ID card in Pakistan. And everyone has a birthright to have a mobile wallet as long as they have a mobile phone and a digital. And 95% of our adult population now has a digitized ID card. So that's the infrastructure level. So the railroads are there. We have got more than 120 million SIMs which are biometrically enabled. That's borderlining on the security answer. So the authentication mechanisms are there. Now the second question is around literacy. So we have to understand that the definition of literacy has changed on us. It's not about reading the newspaper anymore. It's about...
Qasir, just to interrupt quickly, give us some more clarity on the security from a layman standpoint. That is, my money safe in the wallet, right? Somebody's going to steal it. A hacker can log into my smartphone and take my money.
The thing is that the money is never in the smartphone or the feature phone. The money is always in a server which is stashed away somewhere safely. And the phone is just a little device through which you access that money. And for that, you've got digital PIN codes and various things. And then all of these wallets have small transactional limits. So God forbid, if your phone gets stolen, nothing happens. But if someone knows your PIN and they have your phone, then they can transact, but they can only transact for that daily limit on that particular day. So, first of all, this notion about, money in the mobile wallet is not true. And second, the PIN codes, and third, the upper cap is there. So, that's how the security is taken care of. And obviously below that is the authentication leg that we have through NADRA, which very few emerging market countries have. And right now you could put a thumb in, or you could put an ID card number, and real-time database retrievals happen and people get authenticated. And that's a mechanism through which 100 million Pakistanis can have mobile wallets in the next 3 to 4 years and change the country completely. But I wanted to now speak about briefly the education and the literacy place. So I was saying that the new definition of literacy is whether you can operate a device or not. If you can operate a device, if you can load value in that device, and if you can connect that device to the internet, you're literate. And Pakistanis are loading value in their devices way before financial inclusion and branchless banking business models came in, because they were doing it by going to the khokhas and the small shops, buying those scratch cards, scratching value, putting money in the mobile phone, and then transferring them to their friends and family, girlfriends in some cases, and talking to them. This was digital commerce. So here we go. Pakistan is one of the youngest, largest populations in the world. So the younger you are, the more device savvy you're going to be. So I'm in my early 40s, and the way I operate an iPhone, somebody who's 18 or 20 years old in a tier 5 city, irrespective of which social strata they come from, even if they're holding the iPhone the first time, would operate it better than me. Because operating a device is correlated with how young you are. The younger you are, the better you would operate the device. It's got nothing to do with anything. And because we are the youngest, largest country in the world, we've got that statistic going for ourselves. Number two, Pakistanis, all Pakistanis, I assure you, can count. I've never met anybody that I've given the money that they were unable to count. We all know how to count. So we are all numerically literate. That's the second thing that's required for you to get financially included. And the third thing is that Pakistan, by the way, is the third largest in English-speaking country in the world, after the US and India. We have everybody here understand yes, no, enter, cancel, thank you, bye-bye, hello. We know all of that, and we know how to operate these devices, therefore. And all of us have ID cards. So I think this thinking, and I also want to tell you that people who have less money or people who are underprivileged, their ability to move money around or their financial diaries are a lot more complicated than people with money, because they have a few hundred rupees and they have to rotate those few hundred rupees and get by, and they are always there for each other. So they always lend to each other, and they always get their money back, unlike some of the more affluent people. So this notion that people in Pakistan would need elaborate upgrade in education to be able to operate a mobile wallet is a fallacy of the people that don't know them or that live in the cities. As long as we go out and create products and services which are solving real needs, in no time the guys are going to digitize themselves, because it's solving a real problem for them. And the real problem is actually digital credit. Why people can't get a loan in this country is because they're all working in cash. The minute they start to operate in digital payment scenarios, different types of business models will start to lend to them. So what I'm saying is that digital credit becomes the biggest use case for digitization of payments and services and financial inclusion in Pakistan.
Brilliant, brilliant, Kasif. You've given us, I think, in a span of 10 minutes, a fantastic summary of how actually digital finance is going to realize its potential in the developing world and in countries like Pakistan. And in the process, you gave us a new definition of financial literacy, which was brilliant. So we are almost out of time. I'm going to ask one question from all three panelists, and I'll request you to keep your answer within 90 seconds or so. And Victor, I'm sorry I didn't get a chance to talk to you as much as I wanted to, but I was fascinated by the book that you wrote, The Trouble with the Tigers. Can you talk to us about what this book was all about?
Yes, it's sort of a bit off the track of financial inclusion, but I think the relevant part, it was basically about the Industrial Revolution in Southeast Asia. And I think the important thing is that the pattern of economic development, the way countries get rich, is very, very similar and has been since the first Industrial Revolution in Britain in the 1700s. But the difference is, and this is where we come to our conversation today, is that it gets quicker and quicker and quicker. So something that took 100 years in the UK, took 30 or 40 years in Japan, 20 years in Southeast Asia. It is just getting faster and faster. And one reason for that is technology, and financial technology is part of that. So you just have this astonishingly rapid acceleration of the way industrial revolutions work. And that leads to all kinds of changes, economic changes, but also problems for the environment, social changes that are very wrenching for all kinds of traditional family systems, and so on and so on. But the implications are enormous for everybody. And South Asia, Pakistan included, is in the middle of a very sort of rapid transformation in that phase. And financial technology and forms of lending, whether they're micro-lending or macro-lending, it's part of that very, very accelerated and exciting process. It's exciting and it's frightening, and it's happening in Pakistan right now.
Excellent. Great point that the speed of change has really accelerated in today's age. Thank you. Ali, I'll come back to you. If you can share with us now what's in the pipeline, what's cooking with Garandaz, what's coming which is exciting, that makes you excited.
Well, there's a lot cooking. I hope I have a very, very tasty dish. Well, coming back to one of the points that you mentioned, whether digital financial services is the silver bullet. I don't know if it's a silver bullet or not, but it's definitely a silver lining, you know, so it really depends upon what comes out of it. Now, what's cooking, and I think what are some of the key things coming out in a very, very short span of time. We are going ahead with another FinTech Disrupt Challenge. This time we'll do it in Karachi. Then we are doing a challenge fund in which we will fund women-owned or businesses who are primarily run by women or who have a substantial representation of women. And we are going to engage incubators / accelerators where we'll have the cohorts, take them through a program, and then also give them patient risk capital, essentially equity with mathematically unlimited risk, you know, which can be converted into grant. So these two main interventions are coming very, very soon. And we'll be announcing it and looking forward for engagement with the market on this.
Thank you. Both of these initiatives sound very exciting. We look forward to finding out more about them. And last question to you, Kasif, in 90 seconds, if you tell us what are you working on these days and what keeps you awake at night?
Our mission is to demonetize digital commerce in Pakistan. We feel that if digital commerce is made absolutely free, the transition that Pakistan will make, right now if you leave things the way they are, it'll take Pakistan 10 years to move from a cash-heavy to a cash-light economy. We feel that if we can make digital commerce absolutely free in this country, like WhatsApp messaging, then this transition would happen in the next 3 to 4 years. So the opportunity to change Pakistan at the back of digital commerce becomes real and achievable within 3 to 4 years if it's free. And that's what we are doing through Finja and Finca collaboration through a product called SimSim. And SimSim is in a pilot with 25,000 users, and it aims to create a business model which is absolutely free. And we feel that's the recipe for behavior change in this area, in this country.
Thank you, Kasif. This is indeed an exciting and incredible vision of making payments completely free in our country and hopefully one day in the world. With that, we're out of time. Thank you very much to all of my 3 esteemed panelists for a very engaging discussion.
And thank you, Chairman. I'll ask you to stay for a moment while we make a swift presentation. Could I invite to the stage to give that presentation the CEO of Kansai Paint, Agha Zafar, and we'll present you all with a small token of appreciation. Not to Victor, he's already had one because from previous experience. But please, Agha Zafar, nice to see you. Thank you so much. We have the books.
Hi, how are you doing?
Mudassar Akil, thank you. Your appreciation for Mudassar Akil. Kasif Shahid, please. And Ali Sarfraz. Once again, thank you to our panel on financial inclusion. Gentlemen. So, ladies and gents, we come to the final leg of this 2-day event. Take a quick group photograph. Thank you very much. Thank you very much.